jumping straight into Eli Lilly today. Everyone is watching the price action, but the real story is the massive 2026 guidance and the dominance of their GLP-1 portfolio.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get going, if you want to keep getting these breakdowns where we cut through the noise and get straight to the value, make sure you subscribe and hit the like button. It really helps us get this info out to more people like you.
All right, let's get into it.
So we're sitting here, it's February 2026, and the screens are just a sea of green for this one name, Eli Lilly. They just reported Q4 2025 earnings, and honestly, the reaction is historic.
It is. They have officially become the first pharmaceutical company to cross the $1 trillion market cap.
$1 trillion. It's just a staggering number.
It really is. I mean, to put that in context, that's larger than the GDP of most countries. It puts a medicine company in the same league as, the biggest tech giants.
Apple, Microsoft, NVIDIA. And what's so wild is that pharma is usually seen as this slow, defensive sector. You buy it for the dividend, not for this kind of explosive growth.
Lilly has completely flipped that script.
Yeah.
It feels like we're analyzing a tech company today.
Let's look at the numbers that got us here.
Yeah.
Q4 revenue, $19.3 billion. That's up 43% year over year.
I mean, for a company that was founded in the 19th century to be growing at 43%, that's not supposed to happen.
And it wasn't a small beat either. They just crushed the consensus estimate.
And they blew past them. Wall Street was expecting something like $17.9 billion. So they beat by over $1 billion in a single quarter. But if you look under the hood, it's not just that they sold more stuff, it's what they sold.
Right. You're talking about Mounjaro and Zepbound, the heavy hitters.
Precisely. Mounjaro alone, just that one drug, brought in $7.41 billion in Q4. That's up 110% the previous year. Just think about that. A drug that, a few years ago didn't even exist commercially is now on a run rate of nearly $30 billion a year.
It's the definition of a blockbuster. But here's what's really interesting to me. For the last couple of years, it's all been about this duopoly, right? It was always Eli Lilly versus Novo Nordisk. But looking at the charts today, Lilly is breaking out to all-time highs, crossing $1 trillion, and Novo is actually down.
It's down significantly from its highs, yeah.
Is the duopoly dead?
I wouldn't say dead, but it has certainly decoupled. We're seeing a massive divergence. The market is basically saying that Lilly has won the execution war. It's not just about who has the best patent.
It's about who can actually get the pens into the hands of patients.
That's it. And that brings us to the moat, the competitive advantage.
Which you're saying isn't the patent, it's logistics.
That is the underappreciated story here. Everyone focuses on the biology, the science. But the real bottleneck for the last 18 months or so has been manufacturing. These aren't simple pills. These are complex biologicals that need to be put into sterile auto-injector pens. That requires massive specialized facilities. And Lilly, well, they spent the last 3 years pouring about $3.5 billion into building that out.
So while their competitors are struggling with supply,
Lilly is shipping the product. They spent the money when it was risky, and now they're reaping the rewards. They have the supply to meet this incredible demand. If a patient goes to the pharmacy and Mounjaro is in stock, but Wegovy isn't,
they're switching. And they probably won't switch back.
They tend to stay. And that leads right into the 2026 guidance. This is what really lit a fire under the stock.
Yeah, they're not just saying good job on Q4. They're signaling that 2026 is going to be even bigger.
The guidance it's aggressive. They're projecting revenue between $80 and $83 billion for the full year.
That's like a 25% growth rate on top of the massive year they just had.
It is. But the number that really caught my eye was the EPS, the earnings per share.
The profitability.
Exactly. They are forecasting adjusted EPS of $33.50 to $35. The street was expecting something closer to $33.20. This shows what we call operating leverage.
Okay, break that down for us. What does that mean in this context?
It means their revenue is growing faster than their costs. Once you build that $3 billion factory, it's a sunk cost. Every additional pen you sell after that point is incredibly profitable.
I see.
So a 25% jump in sales could lead to, say, a 35 or 40% jump in profit. That's why the stock is acting like a tech stock. The margins are expanding as they scale.
It's the Amazon model, but for medicine. Build the infrastructure, Then just turn on the cash flow spigot.
You got it. And the big money is noticing. I saw a note from Goldman Sachs this morning. They raised their price target to $1,260.
Now, we don't give investment advice here, but when you see a number like that on a trillion-dollar company, it says a lot about institutional confidence.
It tells you the smart money believes this growth is durable. They see a runway that extends well into the 2030s. They're looking at the obesity market as maybe the largest addressable market in the history of healthcare.
Okay, so that's the bull case. It's incredibly compelling. Infinite demand, increasing supply, expanding margins, a dominant position. It sounds perfect, but you know me, I get nervous when things look this perfect. So let's look at the flip side. What's the bear case here? What could derail this train?
It's crucial to look at the risks, because at $1 trillion, the market has priced in absolute perfection. Any slip-up will be punished, and the biggest risk is pricing pressure, specifically the gross-to-net spread.
Okay, gross-to-net, that sounds like jargon. Translate that for us.
So Lilly sets a list price for Mounjaro, let's say over $1,000 a month.
Right.
But almost nobody actually pays that. They pay a net price after Lilly gives rebates to insurance companies and the PBMs, the middlemen, to get on their approved list.
So they have to pay to play, basically. Give a discount to get access to the patients.
Exactly. And that discount is getting bigger. In the earnings call, management actually called out a low to mid-teens pricing drag.
A pricing drag, so even though they're selling more, the price they get for each one is going down.
The net price they pocket, yes. This is the trade-off. As Medicare starts covering these drugs, which is great for volume, the government negotiates hard. Lilly is essentially trading margin for volume. They're saying, we'll take less profit per pen, but we'll sell 10 million more pens.
That strategy works as long as the volume keeps exploding, but if that growth slows...
that pricing drag starts to eat into your earnings really, really fast. And that's the danger zone. If competition heats up, or if the government passes something that caps prices, the whole model gets squeezed.
And speaking of competition, Novo is down, but they're not out. And there are others coming, right?
The sector war is just beginning. You have Roche, Amgen, Pfizer. They all want a piece of this. But the more immediate threat might actually be from the gray market, the compounding pharmacies.
Oh, yeah. I see this all over social media. People getting generic versions for way cheaper. The FDA is cracking down on that, though.
They are, but it's a double-edged sword. On one hand, the crackdown validates Lilly's product as the real deal. But on the other, it shows just how price-sensitive consumers are. People are paying the premium now because they have to. If a legitimate, cheaper drug comes along, loyalty could vanish.
So the moat is wide, but maybe not as deep as it looks. And then there's just execution risk. We said the manufacturing complexity is a strength, but it's also a vulnerability.
Absolutely. When you're running your factories at full tilt, you have zero margin for error. A contamination issue at one plant, a supplier problem, and you have an instant global shortage.
And with the stock price for perfection, a supply glitch isn't just a headache. It's a 10% drop in the stock price overnight.
It could be, yeah.
So high reward, but high anxiety. Which brings us to what to watch. If you're following this story, what matters in the next 30 days? What are the big catalysts?
There is one massive event on the calendar. It overshadows everything else, and it's coming in April 2026.
Okay, lay it on us.
The FDA decision on orforglipron.
Orforglipron, okay. Yeah. Why is that specific drug such a big deal?
Because Mounjaro is an injection. Orforglipron is a pill.
A pill.
A once-daily oral tablet. This is the holy grail of the obesity market. Right now, there's a hard ceiling on the market because, let's be honest, a lot of people just hate needles. A pill removes all that friction.
It completely changes the psychology. Taking a pill is like taking a vitamin. Giving yourself a shot is a medical procedure.
Exactly. And the pricing strategy they're looking at is fascinating. The rumor is they're targeting a price cap around $399 a month.
Whoa, $399. That is way cheaper than the injectables. Why would they undercut their own blockbuster product?
It's a strategy to bypass the insurance companies. At $1,000, you need insurance to say yes. At $399, that's in the range of what someone might pay out of pocket. It becomes a consumer discretionary purchase, like a high-end gym membership.
That opens up a massive new market. You're not fighting with PBMs anymore. You're selling directly to the consumer. That's brilliant.
It creates a tiered system. The premium injectable for severe cases and the accessible pill for the mass market. If the FDA approves this in April, Lilly isn't just dominating the market. They're expanding the size of the entire market.
So April is the date. Circle it in red. What else are we watching?
Well, the Q1 earnings call, probably late April, We need to see if that volume versus price trade-off is holding. If that pricing drag gets any worse, investors will get nervous. And of course, the macro environment.
Interest rates.
Always. Lilly is a growth stock now. If the Fed cuts rates, growth stocks tend to fly. If rates stay high, it puts a damper on these high valuations.
So a busy spring ahead. FDA, earnings, and the Fed. Okay, let's bring this all home. What's the lowdown here?
The lowdown is this. Eli Lilly hit $1 trillion because they won the logistics war in the biggest market in healthcare. They executed while their main rivals stumbled, and for now they have a manufacturing moat that is protecting them.
But they're walking a tightrope. They have to manage these massive expectations, pricing pressure, and the constant threat of competition. Flawless execution is the only option.
And that's why the next chapter isn't about doing more of the same. It all comes down to that oral pill in April.
And that, I think, is the final thought. We talk about iPhone moments, when a technology becomes so easy and accessible that it changes society. I think the move from an injectable to a simple pill, that could be the iPhone moment for weight management.
A shift from treatment to lifestyle.
Exactly. When you can pick up a pill for a few $100, it stops being about just curing a disease. It starts being about optimizing a human being. And that shift could make Lilly more than just a drug company. It makes them a lifestyle infrastructure company.
And if they pull that off,
$1 trillion might just be the starting point.
it's going to be fascinating to watch.
It certainly will be. Well, that is all we have time for today on the Easy Money Show. We hope this helped you see the signal through the noise on these massive headlines.
Thanks for listening. Keep your eyes on April.
We'll catch you on the next one.